first of all, the session is going to be mainly done in English today. Donc, la session va se faire principalement en anglais, mesdames et messieurs. Ladies and gentlemen, on behalf of EME Trade, I take great pleasure in welcoming you all and our virtual attendees as well to the 7th Pension Funds and Alternative Investments Africa Conference. It is a pleasure to host you all here at the Intercontinental Resort. As the 7th Annual Pensions and Alternatives event, today's conference has once again brought together many of the leading investment managers, pension funds managers, and institutional investors from Africa and internationally to uncover new opportunities and potential threats for pension funds investing in alternative investments. Across 2 days, these outstanding regional experts will discuss how to pave the way for a resilient and prosperous future in pension fund management and alternative investments. I am certain that by the end of these 2 days, we will all leave with a clearer vision on how to accelerate transformational growth across the industry. Before we begin, actually, ladies and gentlemen, with our presentations for today, here are some house rules. I invite you all to put your mobile phones on silent mode to really enjoy this event in our company. We also have English and French translation available throughout the event. I suppose some of you have noticed the booth at the back of the room, so please visit the team. Do not hesitate, they are here to help you and assist accordingly. And do not hesitate to collect your headsets. Do access the Swap Card app to access the agenda and arrange meetings with other attendees. Please wear your name badges at all times. If you would like to ask a question at the end of the presentation or during the panel discussion, please raise your hand and a microphone will be handed to you by one of our team members. Please ensure you clearly mention your name and the company you are from. Today we have coffee breaks at 10:30 a.m. and 3:30 p.m. and lunch will be served at 1 p.m. until 2:30 in the afternoon in the Senso restaurant. During your lunch and coffee breaks, do take some time to visit as well the display stands. Our coffee breaks, ladies and gentlemen, will be held on this side outside this conference room. I do hope that you'll enjoy the view. Some of our sessions will be held under Chatham House rules, so please do respect this request. No media presence, no social media, no recording. These sessions have been clearly marked on the app and we will notify you accordingly. So Wi-Fi is available. I've seen some of you with your mobile phones a bit earlier. Do not hesitate to connect on PMO Rodriguez Division, and the password is PMO@2024. We welcome comments and photos, so please feel free to post on social media using #PIAAfrica. So I will also be timekeeping the sessions. Moderators, if you see me standing up, you'll know and you'll notice that you don't have much time left, okay? So ladies and gentlemen, we are delighted to begin today's proceedings with the opening remarks by Mahad Ahmed, Managing Director at EME Trade. Please give him a big round of applause while he joins us on stage. I will also like to invite on stage Mary Kamari, Group Executive Corporate Affairs and Investor Relations, TDB, my apologies, Group. Please give her a big round of applause as well. As well as Fola Akwile, Executive Director and Head Financial Advisory, Africa Finance Corporation, AFC. Last but not least, we also have Ken Kunisami, the Chief Executive Officer, Economic Development Board, today to start this morning's speeches with Mahad today this morning. Mahad, the stage is yours. I let you proceed.
Very good morning to you all. Thank you very much, Del, for all the house rules. I hope we'll remember some of them, especially the Chatham house rules for some of the relevant sessions. Very good morning to you all. Welcome indeed to the second edition of PIA Conference. Mary Kamar, Group Executive Corporate Affairs and Investor Relations, Trade Development Bank, TDB. Mr. Fola Afagugule, Deputy Director and Head of Financial Advisor at Africa Finance Corporation. Mr. Ken Ebunsumi, the CEO of Economic Development Board of Mauritius. Honorable Nicholas Sherry, Chair Independent Director of GW Super, who is also with us in the room. Acknowledging His Excellency Dr. Sidi Uta, President of the Arab Economic Development Bank in Africa, represented by Monsir Kalouche, his advisor to the President. Diplomatic corps, head of various delegations from Angola, Cameroon, Cote d'Ivoire, Djibouti, Kenya, Mozambique, Namibia, Malawi, Eswatini, Nigeria, Zambia, Zimbabwe, and of course South Africa. Distinguished sponsors, ladies and gentlemen, all attendees, all existing protocol duly observed, a very good morning to you all. On behalf of the AEB Trade Team, it's a great privilege for me to welcome you again to the second edition of the African Pension Funds and Alternative Investment Conference taking place in this beautiful venue and country. It's a delight and a fresh air to be back in Mauritius, coming from the cold and grey, rainy London, to be here with you guys again. And against the backdrop of this year's edition, I'm sure you don't need a reminder, but the current geopolitical storms in both Europe and Middle East, essentially Africa's slow emerges recovery from the impact of the pandemic-19, persistent inflation across the region, exchange rate pressures from east, west, now north, and so on, a number of high-risk distress and defaults in a number of sub-Saharan countries. Yet, despite all these challenges, African economy is predicted to grow at 4% this year. Over the next 2 days, we'll have an opportunity to have some insights into the policy priorities in response to the challenges that I've mentioned. I'm glad indeed to report we have 190 delegates coming from 25 countries and over 50 speakers that are here with us over the next 2 days to share their expertise. I can see in the room quite a number of familiar faces, and of course, I look forward to making new friends. Just by way of reminder, what is the objective of this conference? We set out this conference a couple of years ago for it to be a platform for education and knowledge exchange, to advocate for and to promote the role of pension funds in advancing the economic development of the continent, while of course showcasing credible alternative investments with proven and sustainable returns, and to also provide a platform for networking, and business development. The theme for this year's edition, Reshaping African Markets, Deciphering the Investment Conundrum for Growth, has been carefully chosen to reflect the current developments in the pension funds and alternative industry, in particular the implications for African pension funds considering the global macroeconomic outlook that was mentioned. Of course, we continue to see the rising interest rates, of course, supply chain pressures, the geopolitical situations. All of these items will be dived into detail. Also, the anticipated pension reforms in each of these countries that are attending this conference. While some of the mega forces of the themes that were mentioned yesterday, they're very insightful training. Sort of the mega forces, as it were, which were the demographic divergence, especially in the developed countries, opportunity, of course, for African youth in terms of capacity and talents, and some sort of outsourcing opportunities there. Geopolitical fragmentation in the context of course, what's happening in Europe, and perhaps some divergence that was referenced specifically within the European or sort of the Brexit issue, and the digital disruption and opportunity that also represents for Africa. So these are all really mega forces, I would say, and that was really captured in some of the training that was delivered yesterday. Let me also take this opportunity to acknowledge and express our profound appreciation to the government of Mauritius, represented by the Honourable Development, but tomorrow will be with us, Honorable Sunil Bola, who's the Minister of Financial Services and Governance. I understand he's just taken up the post recently. Our most gratitude and, of course, appreciation goes to our sponsors for this year's edition. Platinum sponsor, African Finance Corporation. Silver sponsor, BlackRock and eFunds. TDB. Bronze sponsor, DBSA, Student Investments Capital. And associates sponsor, Evers Wealth, Sentinel International Insurance Limited, and CNBC. Without your moral, technical, and financial support, we will not be able to deliver this conference. I would like to, if you can please join me in giving him a big round of applause. As it is a custom, we have quite a number of social functions, including the cocktail this evening, coffee breaks, and so on. So we encourage you to please actively network with your peers, and to, of course, use the digital app for those of you who are familiar how to use these apps. Pensions are a node part of investments across Africa, and we're seeing significant growth over the last few years. Some of them growing at 20% a year. We hope this event will in some way continue to provide useful insights and facilitate meaningful connections to various pension funds across the continent, and to also understand what the challenges and the issues that they face. In closing, before inviting keynote speakers to make their opening remarks, I'd like to once again welcome you all. Wish you, of course, a fruitful discussion throughout. Ladies and gentlemen, I would like to thank you for your attention, and I would like to invite Mary to give my remarks. Thank you.
I don't think I'm taller than you, so it's natural. Mr. Mohammed Ahmed, Managing Director, Trade, Your Excellency, Dr. Sidi Taha, President of Badea, and a cherished institutional shareholder and a strategic partner to TDB, other delegates from our community of institutional shareholders of the bank present here today, from the National Pension Fund Mauritius, Mr. Benny Ambalasa, Director of Investment, State Insurance Company of Mauritius, SECOM, Vasha, Jamal Mugan, Africa Re, Emmanuel Biden, Assistant Manager of Finance and Accounts, from Djibouti Pension Funds, Ahmed Sultan, Deputy Director General of Administration and Accounting Officer, Kenny Ponosami, Chief Executive Officer, Economic Development Board of Mauritius, Fola Fakabole, Deputy Director, Head Financial Advisory, Africa Finance Corporation. All protocols observed. Good morning. My name is Mary Kamari, Group Executive for Corporate Affairs and Investor Relations. I'm here to give remarks on behalf of the President, and apology from the President who was supposed to be with us this morning, but I'm sure Ahmed Masa has been with you for almost 6 years, so it's not available to be with us this morning. I also would like to take an opportunity to thank you for always organizing this platform where we share experience and knowledge on global trends, and we do appreciate that, and TDB is a proud sponsor for being a 7th edition. Just yesterday, I met some few people that were asking about Trade and Development Bank. I'm sure this being a 7th edition, most of the people may not know who TDB is. Just to briefly talk about TDB, we're a multilateral financial institution that covers Eastern and Southern Africa across all the regional economic communities. I'll start with COMESA, where we were born, then East African community, the SADC community, IGAD, and recently we went to Ghana and Senegal in line with the ASFTA. In terms of governance, we are owned by 25 member states in East and Southern Africa across the regs. But in 2023, when we revised our charter, we invited pension fund, insurance companies, and other institutional investors to join the bank. Most of them are here today, and we do appreciate your support with us. In terms of our products, mainly we do products, infrastructure finance and trade finance, but mainly 70% of our portfolio is in trade finance. We are rated by both Moody's, Fitch, and GCR, and despite the challenges that we've gone through, we maintained our rating, which is very, very important for us. Relationship with pension funds, as I mentioned, 2023, when we revised our charter, we were able to invite pension funds and insurance companies to join the bank. We've been with us for quite a decade, for almost 10 years. And I think it's a testimony, as we hear some of them today, that it's been a success story that we keep talking about. And I think some of our other sister institutions have also been doing business with them like AFC. So this is really a protocol that we do take pride of, because we're here to share knowledge, experience, as we hear from the panels today and tomorrow, to know what the trends are and where the opportunities are, and alternative investment that will be working with results. Indeed, TDB Group, we've long supporters of the idea of making African institutional capital work for the continent and sustainable and inclusive development. Currently, we have equal shareholders of both institutions as well as sovereigns. We have 25, and we're very proud that we have almost 20 institutional investors in our community as strong supporters. It's a very strong testimony that the bank has been not only profitable, but continues to be a stable bank on the continent. So we're very proud of the success we've had with our pension fund shareholders that are here today. In terms of return and impact, TDB promotes economic and social environmental development and regional integration in its 25 member states. It has raised funding from pension funds, insurance companies, DFIs, and other institutional investors to invest in trade, infrastructure, and development projects. On the triple bottom basis, when investing in TDB Group, institutional investors can not only earn attractive returns, but also growth of the economies as well as creating jobs. In 2013, TDB started its partnership with institutional investors by raising equity through a class of shares designed for institutional investors, offering dividends and capital appreciation as well as impact. This class of shares has attracted investors from the continent and beyond. In addition to the one I've just mentioned, these pension funds include Pension Fund Mauritius, Pension Fund of Seychelles, Pension Fund of Uganda, Pension Fund of Rwanda, Pension Fund of Djibouti, and Pension Fund of Tanzania that recently joined the bank. Including other institutions that are mentioned, there's BADEA, there's IFU, there's China, as well as the African Development Bank, and as well as OPEC Fund. Class B, as we call the asset class of institutional investors, have a great success. So far, we've raised close to $300 million of equity. The shares return 7% of capital appreciation on average of 2.5% on a USD dollar balance sheet. Despite the challenges the bank has gone through in the last several years, we kept paying dividends. As you all know, most banks are not profitable in the last, especially during COVID. But despite COVID, we were able to pay dividends. And even the difficult years, we continue to be profitable and pay dividends. And this is a commitment we continue to make to our pension funds and institutional investors. Furthermore, our asset management arm raises third-party capital to invest through funds with strategies aligned with the development impact of TDB Group. In 2019, we launched the Trade Fund, an open-ended collective investment scheme which invests in trade finance as a very attractive asset which boosts the profit growth of the group. It offers stable absolute return created from the market returns. In the past 4 years since its inception, it has expanded its asset base amount threefold as it continues to deliver steady and also absolute returns. Indeed, by end of 2023, it had delivered 9% year-on-year and 26% since its launch. In its journey, it has been able to support various economic sectors in the region and contribute to various African economies, growth, development, alongside several SDGs. The fund has achieved its success by engaging diverse groups of investors, including banking institutions and insurance companies, pension funds, and high net worth individuals. Our investor base extends across different geographic regions in Africa, which showcases its confidence in the commercial acumen and expertise of the teams of the fund and the fund manager. Likewise, in 2022, I would like to share one of another unique instrument that we introduced in 2022, which is called Class C shares, which is themed capital. And we called Class C shares, in fact, Green Plus. And I want to use the word plus because we are not yet done with SDG. So the objective of the Class C shares was to attract funding in the line with the green growth and climate change. These shares come from the back of the successful shares that we issued in 2013, targeting the same institutional investors, pension funds, in the last 10 years. They have the same rights to earn dividends. They have a lock-in period of 5 years, but the only difference, they are senior to both Class B and A. In case of liquidation, the bank has never had that challenge. One success story we can share that when we issued those shares, we were able to go to the like-minded institutions, starting with our shareholder, African Development Bank. They were able to give us $15 million to start with, and we also managed to get another fund within the FDB that also gave us $15 million. We have around $30 million in that class of shares, of course in line with the green growth and climate agenda. The beauty with these shares, as you're all aware, most of the challenges in the climate space, use of proceeds is a challenge. The Climate Fund has been able to establish a project preparation facility, which is most of the institutions, especially the DFIs, struggle with. So this project preparation facility will help us to kind of come as upfront capital, or I always call it soft capital, to help us in project preparation, capacity building, as well as building skills within that space. For over a decade, TDB Group has been a regular partner of institutional investors seeking attractive returns, positive impact in Africa through innovative financial instruments, as well, such as Class B and Class C shares that I've shared, and our trade finance fund with empowered pension funds and institutional investors to fuel continued growth while generating stable returns and tackling critical development challenges. How to leverage the trillions of assets under management globally and also in Africa to achieve SDGs and combat climate change has been at the center of developing community discussion for quite some time. We all know that sovereign and private institutional investors have capital and they are adamant about ESG and such as direct strategic partners in the finance sustainable development. But the question has always remained, what is a worthwhile home for their capital? Indeed, for available capital to effectively be catalyzed towards sustainable development, including during difficult times when DFIs and investors are expected to deliver drive of resilience, the right vehicles and projects needed to be investable. At TDB, we are keen to continue growing our community of institutional shareholders, offering both attractive returns and impact in the member states we serve. As I conclude, Ahmed, allow me to share just the update about the bank now in terms of evolution. We are no longer a bank anymore, we are now a group. We have the bank, which has been in existence for 40 years. We now have a captive insurance. We also have the trade fund that I've just mentioned about. And most importantly, we have a trade and development fund, which is a concessional window of the group. And I will just talk about the processing unit of the group because in the challenges, difficulties we're having on the continent, we need both soft and patient capital. So we've established this fund to attract soft money, concessional lending, and we're very happy that through our strategic partners we'll be able to raise money, and in this discussion with several partners ourselves, including the Germans, and most importantly, our partners at the World Bank that has come on board, firstly during COVID, and were able to give us close to $1 billion, both concessional as well as the discussion of having initiatives to make sure that we grow this fund. The fund also hosts the SME window, and been able to have a pilot space for the last 3 years and supported most of the SME projects in our member states. And most importantly, we've also been able to support the capacity building for our member states by training most of our government as well as clients. Thank you for your time, and again, apologies for the pleasure to be here. I hope I've done you justice. Thank you very much.
Thank you very much, Mary, for that insightful outlook and update on the trade development group. May I now please call Fala Fakabuli from AFC.
Thank you very much, and good morning, everyone. I will stand on all the existing protocols that my colleagues have done a very good job of laying out, particularly because it's very important to me to not leave anyone out. I see so many of our partners and investors in the room, so it's extremely important to not leave anyone out. So I'll stand on the existing protocol. On behalf of the President and Chief Executive of AFC, Mr. Samaila Zubairu, I'm delighted to be here today representing AFC. It's always a good thing to be in Mauritius. Any excuse to come to Mauritius, I say. So I hope you all feel the same and are happy to be here. So, distinguished ladies and gentlemen, my name is Fola Fagbule. As I was introduced, I'm a Deputy Director at AFC. We're really delighted to welcome you all here today to the 7th edition of this conference. It's a remarkable achievement, and I want to say congratulations to the conference organizers for doing this with the government of Mauritius, in Mauritius, for the last 7 years. So again, congrats to the conference organizers and congrats to the government of Mauritius for supporting this initiative. Mauritius is an important partner of the Africa Finance Corporation. They are one of our treasured investors. We're very grateful for the equity investments from the pension funds in Mauritius, the National Pension Funds, National Savings Fund of Mauritius, which are both shareholders of the Africa Finance Corporation. So Mauritius is extremely important to us. We're grateful for your support, and that's also why this conference is extremely important to us. And we hope to continue being a supporter of the conference. AFC has been a sponsor of this conference right from the beginning. My colleagues have reminded me that all of the 7 editions we have sponsored, and it's good to see how it has grown and expanded and become more relevant. It's good to see, as I say, so many of our shareholders, our partners in the room. Again, I don't want to leave out anyone, but it's important to just talk a bit about some of the important partners that have invested in AFC's equity, some of whom are in the room today. I see folks from Cameroon in the room, Cameroon Pension Funds and investor in AFC. We have folks from Ghana in the room. Thank you very much for the investments from the Ghanaian Infrastructure Investment Fund, also a shareholder of AFC. Egypt has recently become a major shareholder in AFC, quite a significant equity investment from the government of Egypt. Grateful for that. Last year, we also welcomed investment from outside of Africa for the first time, from Turkey. quite sizable investment as well in Africa Finance Corporation. The South Africans, I see my South African brothers also in the room. PIC made this quite significant equity investment in AFC. I talked about Mauritius, about Seychelles, Africa Re. I believe Africa Re is in the room as well. We have received equity capital from Africa Re, from the Africa Development Bank as well, and many others. You know, I don't want to leave anyone out, but it's important to say thank you to the folks that I can't see in the room, and we appreciate your support. On behalf again of the President and CEO of AFC, I say thank you to you, and I welcome you all to this conference. Now, you know, the theme for the conference this year is reshaping African markets, deciphering the investment economy for growth. You know, from AFC's perspective, we see opportunity. You know, people talk a lot about risks, people talk about challenges, and those are real and those exist. But we have never been more excited about the economic opportunity that exists in Africa today. We have never been more convinced about the importance of what we do, of providing capital, of being a resilient bridge, as we say, for capital to flow from all over the world into Africa. Starting with the capital in Africa itself, this is extremely important to us. Our equity comes from Africa. We have accepted some equity from outside of Africa, but primarily our funding comes from Africa. Starting with Nigeria, many years ago when AFC was founded, but now coming from investors all over the continent, governments, pension funds, you know, savings funds, like I said, central banks. You know, African capital is what makes AFC stand. And with that African capital, we are able to attract global financing on very, very attractive terms because of the way we have been set up, the way we have been organized to ensure that we have one of the highest credit ratings of any financial institution on the continent. And that makes us an important bridge for capital to flow from international capital markets into Africa. We've been performing this service very effectively in spite of the challenges in the last few years. I have my colleagues here, some of whom have worked on mobilizing close to $5 billion in capital in the last few years for a variety of beneficiaries. You have central banks of African countries that have benefited from market access in times when COVID and other challenges, the war in Russia and Ukraine, effectively shut out the Eurobond markets for many issuers. Despite that fact, we have been able to support various central banks to access global capital markets in this challenging period. We mobilize money for all kinds of investments. Some of our investments are now the largest of their kind on the continent. We have the largest electricity platform entity with more than 2 gigawatts of projects either operational or in very advanced stages of development. We're looking to grow that to 3 gigawatts very shortly. We have one of the largest platforms focused on ports and special economic zones across the continent, building very important seaports, special economic zones, rail lines, raw material supply infrastructure, logistics support infrastructure in multiple African countries, all aimed at improving the economic competitiveness of these countries, the export competitiveness of these countries. African institutional investors were told hold investments under management of at least for about $2.3 trillion, right, which is a quite significant amount. A lot of that capital is in the room with us today, and our job is to continue to mobilize and harness those sources of financing, as I say, to partner with international support, access to global capital markets, and to put that money into transformational infrastructure projects on the continent. We've done this in more than 37 countries since we started. We've put close to $15 billion to work already. It's capital is running and being recycled, and we've done this very profitably. I can't talk specifically about our 2023 numbers, which are not yet public, but they will soon be. But close to $700 million in revenue, close to $300 million in profits. It is a very profitable endeavor working on infrastructure financing on the continent. If you are well organized and if you're set up the way we are to focus on these opportunities that exist. Return on equity over 12% that we're able to deliver to shareholders, and we are even now also catalyzing capital into funds because not all investors want to be in the equity of AFC. So we have set up our first fund, the Infrastructure Climate Resilient Fund, which is a very innovative structure. Again, it's focused on the climate theme and on helping to enhance the resilience of infrastructure in Africa, building projects that are particularly designed to weather the storms that we know are coming on account of the change in the global climate environment. And so this fund is going to be at inception about $750 million fund. We have already secured about a third of that amount as concessional funding from the Green Climate Fund, again a big global pool of liquidity. And they have put a third of the capital into that fund. It's one of their, I believe it's their biggest investment in Africa. And that money is going to go as effectively concessional financing to blend with commercial financing from investors like us. We are also committed into the fund, and investors like many of you in the room who are already committed to the fund. But I will mention who those are. So again, we're grateful for your support, and we look forward to the first close of ICRF shortly, which will further increase our capacity to put capital to work across the almost 40 countries in Africa where we are focused. In closing, I want to say that I hope that one of the key outcomes of this gathering for you all will be understanding better the opportunities that exist on the continent, focusing less on the risk and more on the opportunities, playing your role as catalysts in Africa's sustainable development, identifying investment opportunities like AFC, like funds managed by AFC, but many other investment opportunities on the continent that are working to bring solutions to the very serious challenges that we face as a continent. The world is grappling with the adverse effects of climate change, as I mentioned, vulnerability to various shocks. Inflation is a major challenge. Critical infrastructure, extremely important. We remain extremely committed to this opportunity to solving these problems for the benefit of Africa. And so we thank you very much for coming along with us on this journey. Thank you for your attention, and we wish you all success in your deliberations. Thank you very much.
Many thanks, Fola, for really articulating quite the establishing the achievements so far of AFC. And also congratulations on ICRF. I think that's going to be very interesting and fun. I'll now take the opportunity to invite Ken Mitsumi, the CEO of the Economic Development Board of Mauritius, to also give his remarks.
Mr. Mahad Ahmed, Managing Director of Trade, Ms. Mary Kamari, Corporate Affairs, Investor Relations, EDB, and Mr. Fola Bakute, Deputy Director and Head of the Financial Advisory of AFC. Excellencies, as of African countries, distinguished guests, ladies and gentlemen, I dare to say all protocols observed. Apologize if I missed anyone. Again, a very good morning to all of you, and it is a great privilege for me, for the Economic Development Board, to be the official partner for the 7th edition of the Pension Funds and Alternative Investment Africa Conference. In fact, we would like to encourage you to do more of this. I was just sharing that a lot of times we talk about the destiny, the prospects, the opportunities of Africa outside of Africa. And I'm very grateful that you are talking an important topic in Africa today. Over the past 2 years, the financial markets have been marked by significant challenges. Business environment was fraught with global geopolitical uncertainties, mounting inflationary pressures, and rising interest rates after an extended period of easy monetary policy. In the midst of this challenging operating environment, 2023 might go down as one of the most unusual ever in financial markets, mainly because everything seems to have worked out positively, despite these turbulences and many predictions turning out to be wrong. If we take the equity markets, world stocks are more than 20% higher, despite the highest interest rate in decades, and a mini crisis that wiped out one of Europe's best-known banks, Credit Suisse, along with a few smaller ones in the United States. Bitcoin is up nearly 160% on this year. Some emerging market bonds have achieved triple-digit gains, while the 7 tech giants have seen a 97% surge when lumped together. So where do we go from there? While the global economy managed to sidestep recession in 2023, monetary tightening and weaknesses in some major economies suggest the window for recession may just now be opening. As the business cycles matures, inflation moderates, and interest rate peak, capital markets could be nearing an interesting transition period. Slowing global economic growth will act as a headwind to corporate profits. In this environment, equities could be vulnerable, but fixed income and alternative investment would likely pull greater weight and offer important diversification benefits in the returns of a balanced portfolio. Ladies and gentlemen, despite the mixed results, the alternative investment industry as a whole has remained relatively resilient. This is in terms of both assets under management, growth, and performance. According to Preqin Global Alternatives reports, the alternative investment industry assets under management is forecasted to grow at an average of 9.3% from 2021 to 2027. This is higher than the projected 4 to 6% growth for the traditional investor. Against this landscape, Mauritius continues to be the fund domination center of choice and boasts around 1,000 funds, collective assets under management in excess of $130 billion, and a sizable number of them from development financial institutions and sovereign wealth funds. A number of global alternative asset managers have set up their offices in Mauritius. From Mauritius, alternative asset managers can tap into the capital pool and growth opportunities in Africa and the region. As per JP Morgan, the Alternative Investment Meta Outlook 2024, investment in infrastructure, real estate, and alternative assets are seen as potential buffers against market volatility, and Africa does provide these opportunities. Decarbonization 2050 is another long-term, rewarding strategy for financing companies with strong business model following sustainability goals and the challenges of climate change. Additionally, as African pension and social security funds grow in size, leading African countries can use such funds to invest in their future, notably in infrastructure development and green projects. These investments will greatly improve connectivity and quality of life. Most importantly, they would be contributing to sustainability goals. The tighter credit conditions in recent months, retrenchment of banks from the lending space, and the growing opportunity for financing of buyout designer loans have created plenty of opportunities for pension funds in private credit. Distinguished guests, ladies and gentlemen, when speaking about investment, especially cross-border investment in Africa, Mauritius has long been hailed as a bridge connecting global investors with opportunities across the continent by facilitating cross-border investment through our IFC. Let me highlight one key initiative taken by Mauritius that is relevant to asset management funds in the capital markets. With various fund structures available in Mauritius, such as the Variable Capital Company, or VCC, and the Limited Partnership, alternative managers can use as investor-facing pooling vehicles and master funds for investment. In particular, the VCC can be used either for an open-ended fund for liquid strategies or closed-ended private funds. And as a corporate structure, a VCC can benefit from Mauritius-wide double taxation agreement that work for its investment in Africa. The VCC has started to see positive traction with both traditional and alternative managers. We have some 15 VCCs today already licensed by the Financial Services Commission, and another 15 I'm told in the pipeline. It is worth noting that many development finance institutions and impact-driven financiers, including the British International Investment, OPAO, Dutch Development Bank, KfW, Lofund, OPIC, Grofin, and Vegan Group are currently using Mauritius as a platform to set up and manage Africa impact funds in an efficient, cost-effective manner, while benefiting from the jurisdiction investment-friendly ecosystem. Funds structured in Mauritius are entitled to treaty benefits, alongside the partial tax exemption, no capital gains tax, no withholding tax on dividends and interest, and no exchange control where funds can be repatriated freely. In addition, we have also seen an increased appetite for investors willing to consider Mauritius for reinsurance and captive insurance. Moreover, international banks specialists in digital banking and trade financing are also prospecting the jurisdiction. Mauritius is not only a reliable, efficient, and trusted international financial center of choice, but it is also an excellent place to work, live, and play. We are an open economy for foreign talents, with our residency schemes, in particular our occupation and permanent residence permit, allowing investors, professionals, as well as family members to benefit from the excellent quality of life. Before ending, when we were young, we used to a proverb which says that all work and no play makes Jack a dull boy. So I would like to seize this opportunity once again to thank you for traveling from different parts of the world to be in Mauritius. I wish you a pleasant stay in our midst, and make sure that you take time off the conference and also our social events to explore a bit about the beautiful lifestyle in Mauritius. I thank you very much for your kind attention.
So ladies and gentlemen, I invite you all to stand up for a group photo before we move on with our first keynote session. Si les photographes, je vous invite à vous mettre en place. We do have photographers and videographers present today, so do not hesitate to give us your best smiles, right? And it's not only for our speakers of the day, it's also for you, the audience. Thank you to our photographers and videographers as well. Thank you to our opening ceremony speakers, Mr. Mahad Ahmed, Mrs. Mary Kamari, and Fola Fagoule, as well as Ken Pudusami. Let's give them a big round of applause. I'm back on stage, ladies and gentlemen. As you can see, we have Fola Fagoule still with us. He's going to be part of our first keynote session this morning. So for this first session, ladies and gentlemen, entitled Pension Funds, the Catalyst for Economic Development in Africa, I am delighted to invite to the stage our session chair, Mr. Leslie Antawana, Chief Executive Officer and Principal Executive Officer of the National Fund for Municipal Workers. Please give him a big round of applause as well. We also have for this session, Reka C. Mhango, Deputy Governor, Administration Bank of Zambia. This is the back mesdames et messieurs. for this first keynote session.